Hey, good morning, everyone, and happy St. Patrick's Day. Hopefully things are treating you well. My name is Brandy Hake, VP of Agent Success with Premier Marketing. Thanks so much for joining us for today's webinar featuring Cigna's Regional Vice President for Individual Sales, Jim Codney. Jim's presentation will keep us in tune in regards to Cigna's revamped Flexible Choice 2.0 cancer product. I'll turn things over to Jim to educate us more on this exciting new enhancements here and let him begin. Jim?
Thank you, Brandy. Hi, everyone. Thank you very much for taking some time with us. I know it's a crazy time out there right now. So hopefully we can use this to be productive and learn about our product. We're really excited about this at Cigna. We think with the changes we've made, we're going to have you able to deliver the most comprehensive solution for a cancer, heart attack, and stroke product in the market today. We'll go through what all the changes are here as we go. If you would just type your questions in the question box, and at the end, if there's questions, we will do our best to answer them on the webinar. So with that, I'm going to get going. So here's some of the things we've changed. We've had a product out in the market for a few years now, and it was actually our by far our best selling ancillary product. But there was some things we thought we could do better. So we reduced our look-back period on underwriting. Our underwriting look-back period for testing and diagnosis and treatment used to be 10 years. As you see on your screen now, we've moved that to 5 years. Now, for those of you who sell these type of products, I understand that just gets us in line with most of the rest of the industry, but that was a pretty big win for us, especially when you consider we didn't raise rates or change comp at all. So we were able to expand who we'd take without negatively impacting you or your clients. But we've also done some other enhancements to the product, which are really exciting. The 4 riders in the middle of your screen, we'll go through in a lot more detail as we go, but we've added a benefit builder rider, a radiation and chemo rider, a specified disease rider, and an accident indemnity rider, with keeping the 6 riders that were available. So there's now 10 riders available on your cancer, heart attack, and stroke product that you can offer to your clients. Let's back up a little bit and talk about the need and positioning and things like that. I get asked all the time as I do presentations in person from agents who sell, hey, what's the need? How do I position this? Well, I'll tell you sort of what I've found are the best practices from some of our most successful agents. If they're agents who sell Medicare Advantage, really what they're focusing on is the maximum out-of-pocket exposure that the client has, either 1 or 2 years in most cases of maximum out-of-pocket exposure. They also talk about the radiation and chemo co-insurance requirement on a MA, which typically is 20%. Now on a MedSup or any other traditional health plan or group plan, it's a little different. On a MedSup, they're talking about things like travel, experimental medication, loss of income if you have to take time off of work, things like that. So that's typically what the conversation is for those. And the way to start that conversation is pretty simple. Typically what our agents are doing, if they're adding this on at the end of a sale, let's say they're outselling a Med Advantage, they're just saying, hey, who do you have to cover your cancer insurance right now? Or, hey, no matter what you do, just don't cancel your cancer insurance. Now, they don't know if a client has cancer insurance or not, but the reason they say that is just to get a response, either don't worry, I won't, or hey, what's cancer insurance? Either way, that's a great opportunity to start the conversation with our clients. So here's some just basic things about our product. We cover in most states 18 to 99, but we sell a ton of it over 65. again, very comprehensive coverage. So our products for cancer are first diagnosis of internal cancer. It doesn't matter for cancer or heart attack and stroke what doctor or hospital or network they use. We pay all the benefits directly to the insured or their beneficiary, and it's guaranteed renewable for life. So they don't have to worry about, you know, getting older and this stuff dropping off. As long as they have it, maintain their premium payments, they're going to be fine. So let's talk about the need. You know, I won't go through all of these one by one, but there's a couple in here that stick out to me when I look at this. You know, if you look at that blue circle on the bottom left side of your screen, you know, roughly 1 in 2 men will get diagnosed with cancer in our lifetime. And ladies, you aren't much more likely. More than 1 in 3 of you will get diagnosed with cancer in your lifetime. So as you're thinking, is there a need for insurance like this? Hopefully that answers that question. You know, some other scary things, you know, about 92 million Americans are living with some form of after effects from a stroke right now today. And the average American can't even afford $500 of unexpected cost. Now, if that, you know, doesn't kind of raise a red flag for several things, but mainly for our purposes, the need for insurance for this type of situation, you know, I don't know what else we can tell you. You know, if people can't afford $500, what are they going to do to pay their maximum out-of-pocket exposures or pay copays, deductibles if they have to miss work or travel to get treated? So it's a great opportunity to really sit down and have an honest conversation with your clients. And really the need here, or the purpose with a product like this, is if they get diagnosed with a horrible disease, internal cancer, cardiovascular disease, where they're, you know, going to either have had a heart attack or need a heart transplant, etc., what we're trying to do is help shield them from the possible financial peril that can follow that diagnosis. Now, as I told you before, we don't care about networks or doctors or any of that. So if you look on your screen now, these are some typical things that clients can take their benefit and pay for, right? Makes sense. Medical bills, living expenses, experimental therapy, things like that. The good news about our product is it's a lump sum, again, paid directly to the insured or the beneficiary. So Cigna doesn't really care what they use it for, and I mean that in a very caring way. What's important to one client may not be important to another. For instance, if there's a person who gets a terminal cancer diagnosis, maybe they have their bills taken care of elsewhere, have some other plan to pay for that, and what they'd like to do with our benefit is just take a celebration of life trip with their family or loved ones. You know, what's right for them is totally fine. We'll pay that benefit to them, and they can spend that money on whatever they want. So even though most clients would use it to pay traditional bills and expenses that you see on your screen now, we do not have any stringent requirements at all on what they have to spend that money on. Here's the product in a nutshell. It's available in buckets of money between $5,000 and $75,000 in $1,000 increments. In most states, it's available 18 to 99. California sticks out where it's 18 to 64. It's issue age rated, and they're unisex rates. And even on the cancer insurance, we don't ask if they use tobacco, and we don't even ask a family history question. So it's a really nice thing. I know a lot of our other carriers out there right now ask either tobacco, family history, or both. So we don't ask either, even on cancer. So here's how the base policy works. You can sell it one of 3 ways. You can sell it cancer standalone, meaning they only have coverage if they get internal cancer. You can sell it heart attack and stroke standalone, or you can sell it cancer, heart attack, and stroke together. If you do that, you sell one as the base. Typically it's cancer, but it doesn't matter. You'd sell one as the base, add the other as a rider. It's really important to note that if you do that, they're two separate buckets of money. What I mean by that is if your client has cancer, heart attack, and stroke, even if they get diagnosed with internal cancer and Cigna pays their full benefit for that, they still have the heart attack and stroke benefit in case, God forbid, they ever have a heart attack, need a heart transplant, or that stroke benefit. So they still have coverage. Also important to note, those buckets of money do not have to be the same. So if your client has a family history of internal cancer, let's say, they might want a bigger benefit for their cancer than they do heart attack and stroke. So it's completely okay to write, let's say, for example, a $20,000 cancer plan and a $5,000 or $10,000 heart attack and stroke plan. No problem at all. They do not have to be the same benefit because they're separate buckets of money. Now, here's how the cancer policy works. And guys, I really like how we simplify it here at Cigna. Basically, any internal cancer is covered at 100% of the benefit based on first diagnosis. So even carcinoma in situ, which is localized cancer, which some carriers out there only pay 25% of the benefit for, Cigna will pay your client 100% of their benefit for any internal cancer diagnosis. So we do not cover topical skin cancer, but if that ever went invasive internal, it's covered under the full provisions of the policy. So it's a really nice product, really simple to explain, right? Mr. Smith, if you ever got an internal cancer diagnosis, I'm going to help you fill out the claims form, and Cigna is going to cut you a check for whatever your benefit is. It's as simple as that. Now, our heart attack and stroke works slightly different because it's a little more involved, but let me walk you through it. If your client has a heart attack or needs a heart transplant, we pay 100% of the benefit immediately. A stroke has to have lingering effects for at least 30 days to receive the benefit. Typically what that would be is paralysis of some sort of the left arm or some other lingering effect from the stroke. But what we also do is we will accelerate some of this benefit to get a preventative procedure to hopefully avoid one of what I call the big three: heart attack, need of a heart transplant, or a stroke. And so let's say your client has a $10,000 benefit and needs coronary artery bypass surgery. Well, what you would do is help them fill out the claims form. We're going to accelerate $2,500 of that $10,000 benefit, and we'll reserve the other $7,500 for if they ever have a heart attack, heart transplant need, or that stroke with lingering effects for 30 days. Now, it's really important to note, we will accelerate once in a client's lifetime. So coronary artery bypass surgery, aortic surgery, or heart valve repair or replacement, the client will get 25% of the benefit. For angioplasty or stent, they even get 10% of the benefit. So a lot of nice things we're doing to help preventative procedures to then help your client hopefully avoid a major event of a heart attack or something later in their life. So we do offer on these reoccurrence and restoration. Please do not let the name differences kind of confuse you. Reoccurrence is what we call it on cancer. Restoration is what we call it on heart attack and stroke, but they work exactly the same. Basically, once your client, if they ever get diagnosed, once they're 2 years and a day of past treatment and diagnosis, they'll have 25% of the benefit worked up. At 5 years, they'll have 75% of the benefit built back up. And at 10 years, they'll have 100% of the benefit built back up. Now, why is this important? Statistically, if somebody's diagnosed with cancer once, they're more likely to get another cancer diagnosis in their lifetime than somebody who hasn't. Similar on heart attack and stroke, cardiovascular disease. If you've had a cardiovascular disease issue, you're more likely to suffer something a second time. So it's really important to at least consider talking to your clients about these. To give you guys an idea of rate, at 65 years old on a $5,000 cancer benefit, the reoccurrence rider is about $2.60 a month. So it's not a big expensive thing that you're adding to their policy. You're just taking a couple bucks a month and again helping them with added coverage for if they ever have that happen again. Now, here's the other riders that have been on the policy and will remain on the policy in most states. We've got a hospital indemnity rider, an ICU rider, kind of a combo, hospital indemnity and ICU rider, and then a return of premium rider. I really like our return of premium rider for clients who give you this objection. What if I never? If that is truly their objection, then I would suggest strongly that you talk to them about a return of premium rider. Because as it says on the bottom of your screen, we return 100% of premiums paid for the policy and the rider from the effective date minus claims paid at death. So if their true objection is, what if I never, not, hey, what if I change my mind, or hey, what if I need money down the road, but what if I never, I would absolutely offer this to them because, again, covers the policy, the rider. It even includes the rider for the benefit builder on a return of premium. And so worst case scenario, they pass away. They never had anything where they claimed a benefit, and it's a savings account for a loved one, for their beneficiary, that Cigna pays them. Now, best case scenario, which is really a worst case scenario, the client gets diagnosed with a horrible disease like cancer. But what's best case scenario about it is they were going to have that diagnosis regardless of whether or not we sold them the policy or not. But the best part is now you were in their house or they were in your office or over the phone, and you sold them a policy that instead of trying to think about how am I going to pay for this, maybe they can start thinking about how am I going to beat this horrible disease. So again, great opportunity to talk to your clients about return and premium rider on that policy. These are the new riders, which we'll get into in more depth in the next couple slides, but benefit builder, radiation and chemo, specified disease with critical illness, and accident indemnity. Now, benefit builder. It's a rider that's not out there, or at least I haven't seen a rider like this out there on a cancer, heart attack, and stroke product. So for those of you who are trying to wrap your head around what it is, because it is newer, it's really just maybe conceptualize it like an inflation protection rider. So basically what your client can do is choose either $500 or $1,000 growth per year for up to 35 years. So in the scenario on our screen right now, our client buys a $20,000 policy. As you see, in 10 years, if they added that $1,000 bill, in 10 years, it's now, instead of $20,000, it's a $30,000 lump sum. In 30 years, it's a $50,000 lump sum, etc. And that will grow until the client makes a claim, or they pass, or 35 years. So one of those three things is what's going to stop that, assuming they continue to pay the premiums. So it's a really nice option. And the way to have that conversation is to simply say, you know, Mr. Jones, Mrs. Jones, would you agree with me that if you get diagnosed with cancer today, it's going to cost more for you to treat than it would have 10 years ago or 20 years ago? Now, obviously, our clients are going to say yes. Everything nowadays costs more than it did 10 or 20 years ago. And then you say, well, is it reasonable to assume that if that's the case, that in 10 years you'll need more money, and in 20 years you'll need more money? And assuming they agree, that's a great opportunity to add the benefit builder. Now, radiation and chemo is a really nice added rider for us. Again, I would really push this opportunity, or not push it, but stress the opportunity for the rider, especially if a client's on a Medicare Advantage. But it's really good for any type of insurance they might have. On the MA, they just again have that co-insurance provision of 20% for radiation and chemo. But as you see, we have Prime, Advantage, and Supreme options. Those are basically 3 different levels of coverage. Prime's the basic, Advantage is the middle, and Supreme's the highest amount of coverage. Your client just picks which amount, and then they get what's on the screen. I won't read it all to you because I know you can read, but I'll just highlight a few things. Injected chemotherapy, we cover that at $300 a week, even on our base Prime policy. Oral chemotherapy, $300 a month for a maximum of 36 months. Radiation, $600 a week. Even experimental treatment for cancer, we'll cover that for up to 30 days as long as it's NCI approved, and give them the daily benefit. So even on Prime, they get $75 a day for that. So nice little addition for a client who is looking and trying to say, what if I get this? How am I going to shield myself and my family from the financial peril that could come with treatment? Now, here's our specified disease and critical illness rider. As you see, we cover a lot of covered conditions. Now, this is a lump sum benefit, so your client chooses between $5,000 and $50,000 in $1,000 increments. And if they get any of these diagnoses, ALS, which is Lou Gehrig's disease, coma, end-stage renal, major organ transplant, MS, paralysis, loss of sight, hearing, or speech, severe burns, or Alzheimer's, dementia, we're going to pay them a benefit. Now, it is very important to note it's a lump sum benefit, but I also want to let you guys know that if the benefit or if the condition your client gets diagnosed with is Alzheimer's, dementia, we pay half the benefit. Now, sometimes that sounds like a bummer, right? Well, you're only paying half the benefit for this. Actually, it's not bad, because if you think about it, the other option was to not cover it at all. So if your client gets the diagnosis, at least they have some sort of coverage from us if they have this rider. And again, lump sum rider, doesn't matter the doctor, hospital, specialist they're seeing, we pay the benefit directly to the insured. And here's our accident indemnity rider. It's a really nice rider. Really, if you have ever wondered what the #1 cause of visits to ERs across the country is, it's slips and falls. It doesn't matter how old our clients are, they're slipping, falling, active kids, active adults, active seniors, etc. They end up going to the hospital, to the ER a lot for slips and falls. As we said before, 3 levels of coverage similar to the radiation and chemo benefit, the Prime, the Advantage, and Supreme. But as you see, it covers a lot of things. Let's say they have the least expensive option, our Prime option, and they fracture a hip, $750 benefit as long as it was for a covered accident. If that's a dislocated hip, $1,500. If they need to have an ER visit or an urgent care for a covered accident, $75 benefit. Even has a benefit for crutches of $100. So a lot of benefits that you can add. One thing I really like about this, if you were going to sell an accident compared to, like, for instance, our standalone accident, there's no classing. So there's no underwriting on our accident products. And with it built in as a rider, you don't have to find out what they do or don't do for a living. You just add it, and it's simple. So I've got some examples here of Benefit Builder. I'll try not to go too deep and get too confusing, but I really just want to illustrate. So this client, he's 64, he's a T65 client, and he has a $10,000 cancer plan, and he's doing a $1,000 a year Benefit Builder. We just again want to illustrate not only how that grows at 10 years, that $10,000 policy will be worth, $20,000, so on and so forth, but also a great opportunity to show you the cost, right? At 64, a $10,000 cancer policy is $26.50 a month, and then that Benefit Builder's $11.36. So really, you're under $38, and that policy is going to continue to grow every year. Here's a similar scenario. This is a 70-year-old. Now, the difference besides age is this is a $500 annual growth. So still growing, but it's growing at half the speed. And so that $10,000 policy in 20 years is worth $20,000 and so on. Again, $42.50 a month, $7.32 rider. So for a 70-year-old, you can still get him a $10,000 cancer policy with a $500 a year Benefit Builder for under $50 a month. So really great opportunity to talk to your clients about that. This just illustrates the difference in cost between 500 and 1,000. So at 60 to 64, it's basically double. It's 568 and 1136. Same thing at 70 to 74, 737 versus 1474. So again, just illustrating the cost difference. It's pretty much double, which makes sense. Here's our underwriting. I won't go through these in detail, but really just remember 5-year look back now instead of 10-year. Or simplified underwriting. So it's really straightforward, yes or no health questions, things like that. So I think our underwriting now is really, really fair. And I was excited about it when we launched this March 2nd. Here's where the product's available now and will be in the future. So in the dark blue states, you are available now. So if you live and or sell there, you can sell this product now. It just rolled out March 2nd. If you're in a light blue state or selling those 4 states, we're filed. We're working on getting those. We expect those to come through in the next couple months. The orange states, we have our previous product there. So keep in mind, you'll sell the product without those 4 new riders on it for the time being. Don't stress, we are working on getting the new version in those as well. So we've got all but Virginia and New York covered for product. Now we do have product availability charts on our website for agents, which is AgentView. If you just go to AgentView and then on the home screen, go to Resource Center, there will be a little link down in the left bottom of your screen that has the product availability chart. The reason I bring this up is because things change all the time, and if you use what's on AgentView instead of print something and carry it around for months, what's on AgentView is always updated. It's always real time. And then we like to utilize technology heavily. So we've got a really good e-app, folks. Our e-apps being utilized, last number I heard is over 80% of our business comes in on e-app. That to me tells me it's really good, because if it wasn't, our agents like you wouldn't be utilizing it near at that clip. And let's be honest, especially in times like this where we're being asked for social distancing to get through some of the things that are going on out in the world right now, maybe using an e-app with our clients isn't a bad idea. So we've got a great e-app. If you go to AgentView, you just click on Express App 2.0, and then you just fill out some information. It's pretty simple. You hit quick quote apply, and then it's really going to walk you through it. Here's what I like about it, other than it's relatively simple, is that it's got safeguards built in to make sure you're entering stuff in where it needs information. So it's got those safeguards. What's great about that is you rarely will get what I call a go back. Cigna calls an RFI, or a request for information, that delays issuing that application. So your client gets their application processed, and they get the insurance quicker, and you get paid your commission quicker. So it's good for everybody. So you just go through there, you click on it, you just follow it. Really, if you take your time and just read, it's going to walk you through how to do it, and you submit, and you're done. Now, the first time or two, if you've never done this, it'll take you a few minutes, and it'll feel a little uncomfortable, but I assure you, if you do this more than once or twice, you're going to end up thinking it might be the best thing since sliced bread. So definitely now is a great time to consider using an e-app, even if you aren't worried about anything going on in the world. I think our industry's changed a lot in the last few years. E-sales, telesales, even for agents that have a client in their office, filling out an e-app's not a bad option. Now, we do phone interviews here at Cigna, and a phone verification call is simply that. You call, you go through, but I've got some good news for you. If you sell this product and the benefits for a heart attack and stroke and cancer are $50,000 or less, assuming they don't have another heart attack and stroke cancer policy with us, you don't have to do a phone verification call. So if they have no other cancer, heart attack, and stroke coverage with us, and their total benefit is $50,000 or less in each bucket of money, no phone verification call needed. So you just rock and roll right through that, and they don't have to do the phone verification call. But we do make it easy to do phone sales. We really think it's somewhat of the wave of the future. I don't think it'll ever completely replace a face-to-face agent, but we are seeing a lot more with other industries. For instance, Amazon sort of changed the way a lot of us shop. I think eventually it's going to continue that way for everything. So just making it easier for our agents to do sales if that's what they want to do. Now, again, let's get rocking and rolling on this. Ways to position this, right? Maximum out-of-pocket exposure coverage, right? Cost shares on cancer and treatment, chemo. Doesn't matter what they use the cost for, the benefits for, and we don't care what networks. I went through some of the opening statements with you earlier, right? But again, feel free to talk to those. It's really a simple question. It doesn't matter who you are, what you do, as far as how you sell, but simply saying, who do you currently have your cancer insurance with? I don't think that's an invasive question to ask your clients. And really the great thing about these questions is you don't care what their answer is, right? You don't, if you say, who do you currently have your cancer insurance with? And they say, oh, I've got it with company Y, that's a great opportunity for you to offer to do a policy review to see if you can get them the same or more coverage for less premium with us. Or, hey, what's cancer insurance? Well, boy, that's a great opportunity as well. Don't forget, you've got some good features and differentiators with us, right? You've got the Cigna brand, lump sum payments based on first diagnosis, and we cover invasive and non-invasive cancer diagnosis at 100%. That's that carcinoma in situ that we cover at 100%. Now, we do value all of our agents and everybody out selling our products. So right now, we have a new agent incentive that we have not had in the past. And it's a monthly incentive, and I really like it. So you have to sell 5 applications to qualify with a minimum premium on a monthly basis of $30. And if you hit 5, you're going to get $25 an app with unlimited income potential. So if you sell 5 apps, right, that's an extra $125. If you sell 10, it's $250, etc. We don't cap that, and it resets on a monthly basis. And then finally, you know, I know conferences this year are in question or canceled for a lot of carriers. We have just started qualifying March 1st for our 2021 conference. We're going to beautiful Vancouver, British Columbia, up in Canada. It's right on the coast. Guys, if you've never been there, it is gorgeous. I've been up there with my wife, and we really enjoyed our time there. That qualifying period started March 1st and goes through the end of February next month. And the way to qualify is $225,000 in production credits. And how that works is MedSup is sort of a 1-for-1 production credit, and ancillary sales are 3-to-1. So if you sell any of our ancillary products, the product we talked about today, our hospital indemnity product, our accident product, or our final expense, you actually get 3 times production credits. We do not cap number of qualifiers. So as long as you have enough production credits and you are in good standing with us, you and a guest will be invited to attend the trip. So with that, I am done. I really appreciate it. Brandy, did we get any questions, or do you have anything you'd like to add to the conversation?
No, thanks, Jim. Obviously, very informative presentation and eye-opening for sure. I'm excited to communicate and stress the importance out to our agents as well as the rest of the industry. I don't see any questions at this time, but if any agents have any follow-ups, I'll give Premier's number as well. If you want to contact one of our specialists, it's 1-800-365-8208. And I think we are good to go.
All right, perfect. Well, thank you, Brandy, and to my friends at Premier, really appreciate the opportunity. And to everybody on the call today, thank you very much. Be safe out there and make it a great day.